Hello, good day, guys. My name is Nick, technical analyst for Forex. Today, we shall be looking at the technical analysis on the cryptocurrency ETH USD, Ethereum. And first, we'll be talking about the fundamentals which we're seeing before we move right down ahead to technicals, which will be purely what we are seeing on the chart. Now, we have seen that after several spikes since the beginning of the year, up over 40% from January, Ethereum investors have profited, translating into key metrics. According to the on-chain analysis from Glassnode, we have a number of Ethereum addresses in profit has now hit a 10-month high of nearly 64 million. And this comes after ETH dipped below $1,200 last year, allowing investors to accumulate more cryptocurrency now. These investors are profiting from its spike to above $1,800 on Thursday, as related, and the Ethereum price, of course, rallies to $2,000 on the horizon as BS show weekends. Profitable Ethereum addresses increasing according to data from Glassnode. Now, the total number of addresses that are in profit has now surged to a 10-month high of approximately 63 million, notably. And this is not the first time Ethereum will push its total number of addresses in gain to a figure nearing 64 million. Now, before the latest recorded number of addresses in profit, the previous 10-month high sat at around 63.9 million as of March 23, according to the same source. And of course, meanwhile, Ethereum hasn't been the only crypto to see a spike in profitable investing. Now, earlier this month, it has been reported that the total number of Bitcoin addresses worth $1 million or more surged to more than 67,000, slightly higher than the amount of 65,000 in January earlier this year, when BTC and the likes had first crossed 20,000 in months. Furthermore, today the Ethereum non-zero addresses has reached a new ETH of 96 million, and this is, of course, the main fundamentals which we are to look out for. Now, this data suggests that more people are buying the cryptocurrency amid the bullish price action, while Ethereum bullish signals of $560 million in ETH exist, exchanges ETH to continue its rally over the past 2 weeks. The ETH price has rallied by nearly 10% from a low of $1,723 on March 17 to as high as trading at $1,1845 on March 23. Though at the same time of writing, the asset is seeing a retracement down by 3.7% in the last 24 hours with a trading price of $1,775. Meanwhile, looking at a one-day time frame, it seems that as though the assets are slightly retracing, may not last for long, as the price will still need to hit the external high just above the 2,000 region. Now, moreover, Ethereum's trading volume hasn't made any significant move in the past 7 days. Still, the range between 12 billion indicated as seen, and a possible accumulation which may result in another rally that may happen soon. So, given the upcoming Shanghai upgrade set to occur next month, interestingly, the assets market capitalization has added over $5 billion in the past week, moving from a $207 billion last week to $212 billion as of today. And what to expect from this on a technical level? We are looking out for moving back to our 1 hour time frame. We are looking out for a possible retracement to touch this landmark and then a dip, because we have been noticing series of ranges on this chart, no much directional movement. So we are expecting a touch to the most recent resistance at 177.89 and then a drop back to 1709 thereabout. And that's our technical analysis on today's cryptocurrency Ethereum USD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at FedEx. And recently, headlining, we have been seeing that USD preferred over riskier FedEx. And Melius Research initiated the coverage of FedEx with a hold rating and United Parcel Service with a buy rating in a note on Monday, as analysts assigned the UPS a $225 per share 2-year price target and FedEx a $240 2-year price target. They had explained that the companies were boosted during the pandemic as online orders surged, but with the pandemic tailwind subsiding, they are now at two different points on a similar path. Now, the current environment favors UPS, giving a ground domestic focus and a management team that has successfully worked to remove downside variability in margins during an uncertain environment. FedEx Air and International Mix wrote this analysis, why we are looking at FedEx is embarking on a positive and very necessary cost-cutting effort that has been appreciated by the market. And of course, this has been showing signs in recent weeks, has outsized pressure giving greater leverage to air freight and the pace at which the cost goals can be achieved. For UPS, the earning floors is now higher. FedEx is an interesting restructuring story, but carries more and more risk. So what to expect from this? We are currently having a series of ranges, and this range is at 214 and 223 thereabout. So now, if we are to make an entry at this point, we need to respect this ranging pattern, at least to 215, and then a push up back. So now, if we are to enter this and letting it run, we will be looking at nothing less than 48 pips. And also from that entry point for a buy, we're looking out to about 50 pips down to the same position where it's coming from. And that's our technical analysis on today's stock market, FedEx. I remain your host, Nick. Bye for now.